The XRP ETFs have been going absolutely insane. In fact, they've been extremely successful to the point where Brad Garlinghouse, Ripple CEO, has been putting a spotlight on them, talking about the increased adoption from institutional players. We have to address this. We have to talk about a lot of this. So with that in mind, let's dive on in and let's start off with just this weekly amount of volume that we saw. With the market being down the way that it has been, and with the market being as negative as it has been as well, XRP spot ETF still pulled in over $160 plus million. That is a significant amount of money, especially during a down week in crypto. And looking at the last official day, aka Friday, we did see over almost $70 plus million worth of volume just from leverage and spot, combined. The spot volume was about almost 30 million. And just looking at this overall calendar, it's kind of crazy to see, but, ETFs have been very successful for XRP. Even going back to the biggest day, which was the 23rd. I mean, seeing this type of volume, it's wild. At a time where the market is down. I mean, we got to think about how significant that is, considering the impact, right? The impact of the market being down while ETFs are launching and they're still pulling in historical amounts of volume, that goes to show you just how big the demand is for XRP. But also, XRP has been outperforming both Bitcoin and Ethereum because of the inflows. Here we have XRP ETF inflows at $900 million plus as the 13-day inflow streak outperforms Bitcoin and Ethereum. And technically, this shifted into a 2-week-long inflow streak. 14 days. Guys, that is very important to focus on. 2 weeks of non-stop inflows. And it outperformed both Bitcoin and Ethereum ETFs. In fact, Bitcoin and Ethereum saw outflows, while XRP saw over $12 plus million, almost $13 million worth of inflows, even outperforming Solana. Absolutely wild to see. Again, clear confirmation that institutional players and even retail, smart money, is still buying XRP regardless of the market conditions. Now, this led to Brad Garlinghouse putting a spotlight on this, which we'll talk about here in a moment. But I want to address something that I saw earlier today, and that was from Bitwise's CIO, Matt Hugin. Here we have from Safe Crypto. Matt from Bitwise said that the reason they launched a Ripple ETF is simple. The playing field has finally changed. For years, Ripple and XRP were held back by an existential regulatory threat. The SEC lawsuit froze real-world adoption and made major partnerships nearly impossible. But now, the lawsuit is gone. That's why Bitwise moved early with an XRP ETF to give the community and institutional players easy, high-quality exposure through a clean ticker. Check it out.
You also recently launched a Ripple ETF. Why did you focus on Ripple?
Yeah, so Ripple has an extraordinarily strong community. It's a Lindy asset that's been around for a long time. And therefore, we think people want exposure to it in an ETF. And then the second sort of implied question, I think, in your question is what about its real world use case? And my view on Ripple is that this is a blockchain that faced existential regulatory threat for the past X years. The SEC was suing it basically out of existence. As a result, there was no chance for it to have any real world adoption because who was going to partner and build on Ripple when it faced existential lawsuits from the SEC? Just not going to happen. Now those lawsuits have been removed, and there's a chance that this blockchain finds real world use cases now that it can compete on a level playing field. So we launched the ETF to let the community and people who are interested have high quality exposure in an easy ticker. We have a great ticker there, by the way. The ticker is XRP, which is pretty cool. We reserved that one a while ago, waiting for this. And then the investment case is there's a reason we haven't seen dramatic scaled real world adoption. That reason was the regulatory threat. And now it's been released. And so that doesn't guarantee that Ripple succeeds or that XRP succeeds, but it means that.
So yeah, I mean, listen, when we think about this shift here, obviously the entire environment around crypto has changed. And I've been putting a big spotlight on this, especially with regulatory discussions becoming a reality. I mean, the Clarity Act seems as though it's going to get passed fully by the end of Q1 of 2026. If that's the case, that's going to open up the doors in a big way. I recently made a post on X talking about, the moves being made behind XRP, especially with the ETFs. I said here, mass moves are being made for XRP. ETFs just recorded their 11th straight day of inflows. It did lead to 14, totaling 756 million. Open interest is building, funds piling in, and price has rebounded from the $2 support. If momentum keeps up with a complete market reversal and we build bullish structure again, we could be eyeing a run to $5 to $8 plus in 2026. And I do think that it could be much higher, obviously, but I'm being very conservative here. But the main thing that we're looking at for XRP is how the environment has completely changed. And this has led to major players like even Brad Garlinghouse putting a spotlight on XRP from the institutional side. Here we have from Cryptos R Us, Brad Garlinghouse just dropped a massive institutional signal. At Binance Blockchain Week, Ripple's CEO said XRP ETFs pulled in $700 million in just a few weeks. Pure pent-up demand from institutional players that couldn't touch the asset before U.S. regulatory clarity. He also pointed out that crypto is still only 1 to 2% of the entire ETF market and said there's no chance it stays that small by 2026. What he's seen is the real tell. Institutions that stayed on the sidelines are now entering in small sizes, crawl, walk, run. And crucially, he said the recent volatility did not scare institutional capital. If anything, it's pulling them in.
What's your take on this too? Do you think the ETF floor was overhyped?
Definitely no. Obviously what you were describing is all data correct. But I think you got to zoom out a little bit further and realize that this ETFs didn't exist because of the regulatory problems in the United States. They didn't exist. And, in the last 2 or 3 weeks, over $700 million have flown into XRP ETFs, which is just it's pent-up demand from institutional investors, from investors who want access because they don't want to custody themselves, what have you. But look, again, if you zoom out to the macro level, the total ETF market, only 1 or 2% of the total ETF market is crypto. I will bet anybody here that a year from now, that will be more than 1 or 2%. There's going to continue to be inflows. And yes, you could take a snapshot of time and say, okay, there's a billion left Bitcoin ETFs or whatever the data you cited a moment ago. But if you zoom out a little bit further and say, okay, over 2026, do we really think crypto ETFs are only going to be 1 or 2% of the total ETF market? No chance. And so that, again, is one of those macro tailwinds where Ripple sits in a position where we see, particularly for our Ripple Prime, the prime brokerage business, we see a lot of interesting activity where institutions that have been on the sidelines, maybe because of regulatory clarity, maybe because of risk aversion, for whatever reasons they've been on the sidelines, they're getting involved and they're starting small. And they're going to walk, then they're going to crawl, then they're going to walk, then they're going to run. And I think it's going to create a lot of tailwind.
So this moment in the market hasn't necessarily spooked institutional capital. That's what you're saying?
Definitely not.
Okay.
Now, I do agree with him. I do think that institutional capital, though, is fleeing from Bitcoin and Ethereum and even Solana. And I think it's moving into XRP. I think that that's clear by just looking at the outflows and the inflows. I mean, this is very interesting to see. Now, also on top of this, we did hear from the SEC chair, Paul Atkins, talking about the Clarity Act. Because if we're thinking about clarity really opening up the doors for institutional players to enter in, and if institutional players are not getting scared, if they are tapping in a big way, what do we think happens after clarity gets passed? Here we have Justin, SEC Chair Paul Atkins discusses upcoming crypto legislation, including the Clarity Act and the Market Structure Bill. We and the CFTC will be actively working on harmonizing our two systems. We will collaborate and the markets will be better for it. Check it out.
The Genius Act was enacted, and that's great. That was the first time
For stablecoin.
For stablecoin, right. The first time that the United States government has recognized a particular type of product, a digital product. So that is great. Salute Congress for getting that through, and the president for signing that bill. Now, there's a market structure bill that's going through, the Clarity Act that was passed by the House. And so that we'll see where that goes in Congress. And so I'm hoping that they'll be able to get that through. But in the meantime, we in the CFTC will be, and already are, actively working on harmonizing our two systems, because for too long the two agencies have been discordant, and I think we will be able to really work closely with them to make sure that we are harmonized. Our rule books are harmonized, because I've said over the years, like the fields are littered with the dead bodies of would-be products that kind of got caught in the crossfire between the two agencies over the last 40 years. It's terrible. And so we should be working for the investors in the United States, for innovators, so that they can, so that our marketplace can be more efficient and be de-risked. And so we can do that by marrying the cash markets and then the derivatives and future markets, and how the two agencies approach it. We can do so much together, linking arms and focusing on our job. The CFTC has great expertise, obviously, in those futures and derivatives markets. We have great expertise in the cash markets, and there is just no reason why we can't collaborate. We will collaborate, and I think that the markets will be better for it.
So yeah, I mean, listen, if we are thinking about the environment going into 2026, we have regulators collaborating on major structure bills and even clarity acts. This is only going to unlock the institutional doors in a much larger way. And so far already with the ETFs, I mean, you got to think about it like this. XRP ETFs already hold well over $1 billion in assets under management, and these have only been opened up for less than roughly a month. What do you think happens when the market reverses? What do you think happens when XRP starts to pump again? What do you think happens when institutional players have the green light across the board to enter with scale, and the entire market is trading significantly higher than where it is right now? How do you think these ETFs are going to perform? We already got an insight on how they're going to perform under pressure and, in a downward market. So think about how big these ETFs can get if we started to see a stronger reversal, a stronger performance from XRP. I think that a lot of people are overlooking what's happening right now. And Brad Garlinghouse is extremely bullish. He's giving us the institutional signal. And I do think that this is going to continue. I do think that institutional players have been manipulating the market in a way where they're shaking out retail and they're swooping in and buying up the dips. And this has been going on for a while now. This is why I keep telling everyone, going into 2026, I think that we're in a completely new world for crypto. We're following the liquidity cycle. It's extending. 2026 seems as though it's going to be a very big year for crypto. So with that being said, I hope that you guys enjoyed this video.